Hello, this is Stephen Cruz. I'm a mortgage broker with Verico iMortgage Solutions, and I wanted to create this video series for my clients and so that you understand some of the mistakes that other clients have made and I've seen people make in the past, and so that you can avoid them. So this video series is here to cover the 8 costly mistakes that home buyers make when they arrange a mortgage and before they buy their house. So the first mistake is not to get pre-approved early enough in the process. Many home buyers will get pre-approved very close to when they want to purchase, and there are a number of things we can do early in the process that can help you either increase your down payment or prepare for the purchase more readily and get you in a better position for purchasing. So the earlier in the process you talk to a mortgage broker or your bank, the better it is for you. Second mistake is to interview just one lender. As a mortgage broker, certainly I want you to work with me or one of my colleagues because we do work with many other lenders. But even if you're just out there shopping on your own, it's good to talk to a few different lenders and find out what they offer. It's like going into the Apple store. When you go to the Apple store, they only talk about Apple products. They don't tell you about the other products that are available. And it's really important for you to understand exactly what you're getting. It's a big investment. It's going to be payments that you're going to be making for a very long time, and so you want to make sure you've got the right options and you know everything that's available to you. Number 3 is not understanding lender penalty calculations. Most first-time buyers just never think of this, and I get it. You're not thinking about getting out of the mortgage down the road. You're thinking about buying a new house and you're excited about that, and that's excellent. But you also have to be aware down the road, if you do decide to sell your house early or refinance or do something before the end of your term, there could be a penalty. And if one penalty for a lender is higher than another, it's more advantageous potentially to go to the lender with the lower penalty, especially if the rates are pretty much equal. So it's important to understand how that works. Most lenders describe the penalty equally, so they all say it's the greater of 3 months interest or an interest rate differential. But that calculation can be significantly different depending on how the lender calculates that. So it's important to know the differences, and a good mortgage broker will tell you that. Not budgeting for closing costs. This is a mistake that many people make, but it's important to realize exactly what costs you're going to incur when you buy your house. In some provinces, there's a land transfer fee that cannot be financed, and so you have to pay the government a fee to transfer and take possession of the home. There's other closing costs like legal fees, moving costs, some setup fees for different utility companies, etc. So you want to be aware of all of those costs so that you have the money and you're not dipping into your credit cards or dipping into debt to cover that extra cost that you may not be aware of. Setting up debt before a possession date. Number 5, that is really important. So once you're approved for a loan or a mortgage, you want to make sure you don't go out and get any more debt. Don't go buying a bunch of furniture on credit, or don't go getting a new car before you have secured and moved into your new house, because that payment could affect your ability to qualify in the future. And if you're thinking about doing that, then let your mortgage broker know during the process so they can include that calculation for your qualifying, and so that we can let the lender know if that happens. Because the lenders don't like to be surprised at the last minute that, oh, suddenly you have more debt than they thought, and that can cause a big problem at the possession date. Changing jobs, just like any new debt, if you're going to change jobs, not a good idea during the approval process. So once you've moved in and you're established in your payments, then you could certainly change jobs. But before you move into your new house, and after you've been approved, do not go and change jobs without letting your lender know, and otherwise there could be some substantial issues at possession. Focusing on the interest rate only. Many clients who are the interest rate is important, and it should be. Interest rate is important to all of us for purchasing a house and making sure you get the best interest rate. But also, some interest rates come with limitations. Some come with extra programs available, and so you want to be aware and balance the interest rate with the programs you want, and and the flexibility you want with the mortgage. Sometimes you get a slightly lower rate, but the penalty calculation is higher, or sometimes you get a better rate, but they don't allow certain things. You can't sell, you can't refinance your house without selling it. Certain programs that limit that. So it's really important to be aware of the differences and what is involved in the interest rate. And finally, focusing only on the nicest house. Now, it's when you go out shopping and you know you're qualified for a certain amount of money, you want to shop for that amount. You want to try and get the best home in that for that amount. But sometimes there are some programs available where you can get some extra financing to purchase your home and get some renovations as well. So then you could find a house that may not be perfect, but you can renovate it so that it's perfect, and you can negotiate a better price for that home instead of buying just the nicest house and maybe paying a premium because everyone's looking in that price range and they're all competing for that one house. You could look in a slightly lower price range and negotiate a better price and then turn it into the perfect home for you. So those are the 8 mistakes. And we'll have a series of videos after this one to go into these 8 mistakes in more detail. But thanks for tuning in. This is Stephen Cruz, mortgage broker with Verico iMortgage Solutions, and we'll talk to you soon.